Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a look at the sterling versus US dollar for February 24th, 2015. Let's take a look at the daily chart here to start off. In action here today, of course, we know that Janet Yellen gave all her guidance and thoughts on how the Fed's going to react, but left the door open basically for everything but a raise or a lowering in rates. So we really don't know when a liftoff might occur. We don't know how many months it's going to be from the time that she gives guidance before raising rates. We don't know how much she's going to end up raising rates at that time. We don't really know, except that that she wants to see inflation to show signs that they're fairly confident that it's going to gradually rise to 2%. Part of that includes a rising price of oil and jobs remaining strong. So all of it is pretty much data dependent, and we're not really any more educated than we were yesterday, in my opinion, with regard to what she had said in trading in her comments here today. So I defer to the technicals, of which I do most of the time anyway, and we take a look at the daily chart here. And what can we say about the daily chart? Well, we know that the market moved above this trend line. Now, it's been in a downward spiral here for quite a while here for the sterling versus US dollar, but the market moved above the trend line, so that's a little bit more bullish. Now, we've been in this consolidation phase over the last, 10 or 12 trading days, where the market's moved a little bit up to the upside, to the downside, to the upside, to the downside, now to the upside again. And we also know that we have this big ceiling here. The ceiling here comes in around the 65 level to the 84 level. I just clicked on my thing and took that line off of there, but this comes in around the 84 level. Is this low right here going back to December 23rd. So 65 to 85 is a pretty big ceiling, and last week we came in between those two levels and stalled out, and we did it again here, and we did it again here, and we did it again today in that 65 to 84 level. So there is this banging against the ceiling here. But there are some other redeeming qualities from a bullish standpoint if you take a look at the hourly chart. And off the hourly chart, we were banging on the downside against the 100-hour moving average through here and kept on finding support. Then we had the comments come out, and we forced the market through the 100-hour moving average only briefly, maybe about 5 minutes. And the market found support buyers down here against 50% retracement of this move, and also the 200-hour moving average. So it seemed to me like there was buyers down beneath. And so I'm going to give the benefit of the doubt to the buyers in this market. I'm going to say that this test right here, and maybe even this failure right here, because prior to that, we kept on finding support against the 200-hour moving average through here, didn't we? So we had the chance to go lower here, and it didn't. It failed, and we rebounded sharply to the upside. So I'm not surprised that we saw the buyers again against the 200-hour moving average here. So I'm going to give the benefit of the doubt to the buyers. And if there's a battle going on, and indeed there is, between the 100, the 200, and up here near the 65 to 85 level, I'm going to assume that the buyer's going to win, or that's what I'm thinking, and the buyer's going to push this market ultimately through the 85 level on the top side, and we're going to start to see the market move higher from there. Where can we go? Not very far. I mean, up above is this trend line, and this trend line is moving up on a daily basis, and this blue line right here represents the 100-day moving average, and that's moving down on every day that goes by. So you can almost imagine that in tomorrow's trading, this trend line and the 100-day moving average is going to be converged, and those levels are going to come in probably around the 155.88 level, currently trading 154.59. So we got another 130 so pips before we run into a huge upside, or another upside target on the top side, which should cause some resistance against that 88 level. So that's how I see the sterling versus US dollar, or that's why I see the sterling versus US dollar being a little bit more bullish off the hourly chart, and then I see the target up there. Now, is there a risk level on the downside that I might be interested in that would stop me out in case I'm wrong? Because these markets are choppy, and I was going to just point out that this 100, 200-hour moving average was a nice little risk-defining level, as is this 30 level right here. And while I was talking, we've seen the market move higher against that level. So this is this last test here, maybe right here, solidifies the 100 and 200 hour moving average as a support level on the downside. And we'll see, so that could be our risk defining level on the downside for any longs out here. And we need to get through that 65 to 85 level. If we do that, should be open sailing for another 100 or so pips to the upside. So there you have it. Look at the sterling versus US dollar. My name is Greg Mikulowski. Good fortune with your trading. Bye bye now.